afternoon. It is afternoon, right?
Yes.
I'm Scott Forcino from eXp Realty in the New York City metro area. I created PlugIntro for real estate professionals to connect meaningfully with their local market and be local famous. I have with us today Corrina Carter, who is a colleague and a friend and part of an organization that we both are actively involved with. We want to hear what Corrina has to say about the lending industry, her market, what is her forecast in these different times. It's October 2022. That might give you an idea where we are. And we're going to learn a lot, and we're going to probably be delighted by the information Corrina has. Good afternoon, Corrina.
Hey, Scott. Thank you for having me. I'm Corrina Carter. I am broker owner of CMS Mortgage Solutions, Inc. in Virginia Beach, Virginia. That's our main hub of business. And I've been in the mortgage industry for 25 years, owning my own company for 17. So the longevity's been there, Scott. I understand this market. I think I grew up in this market, as I would call it. So I absolutely love where we are right now. A lot of people don't, but I do.
I'm surprised. Why do you love it?
I love this market because it's going to really diversify and also weed out the people who aren't educating people properly. So I say I created my company based on I wanted to be able to serve and give affordable mortgages as solutions, and that's part of my name, but also educate people on the facets of getting a loan, also becoming a home buyer, making sure that they structure their financial position to be in position to get a home. I'll say with rates being in the twos for several years, threes for a long time for the past 10 years, a lot of people didn't have to financially prepare as much. Or did you have to be as educated to be a Corrina, right? So now you really have to prepare people and be educated and also make sure that they know how to run their business within a business. So my loan officers are free to run their business within our business, but they also have to be educated enough. So I say a long time ago, a lot of people wouldn't come work for me back in the mid 2000s because I made them be educated. I made them learn how to run DU, LP. I made them talk guidelines. I made them talk to the account executives. I made them talk to the underwriters, which now people now want to do, right? They want to be able to express and understand to the public of what actually getting a mortgage is and how do you financially prepare to get one. Because you're probably going to have to prepare a little bit longer than you would at 2% than you will at 5 to 9% in some cases.
Really? You're right. You're right. So you're saying there really cannot be any longer loan officer order takers.
Yes. That's a pet peeve of mine. I hate that word, but Scott, we have groomed a lot of order takers in the past few years, right? And I'm not just talking two, I'm talking probably since 15. So you're talking 7 or 8 years. We have groomed that next level of loan officers as order takers. The next level, rewind, is going to look identical to what I got into the business in 97 to 2007, right? My first 10 years, the next 5 years, I feel is going to be identical to what that looked like. And it sounds odd. Rates are really where they were then. The educators will pop out. You'll understand who's in your market, who is the true specialist for that particular program or product or what you're known for. So I think that's really going to be seen.
Well, it sounds like you're discussing education with consumers, but we both know that, or tell me if I'm right, that so much of the business is done by referral through trusted contacts and past experience. I would think that a big part of the education has to be with your referral partners, the realtors. Can you let us know how you handle that aspect of the of generating business?
Absolutely. So if you were to go back on my Facebook or follow me for the past 10 years, you will see where I've always did home shows. I've always did expos. I've always did lunch and learns with my agents. Now, being as busy as we were, I'm going to be first to admit we didn't do as many the past 2 years. And then with COVID, we couldn't, right? So now people are scrambling to figure out how to put that together. What does that look like that someone's going to come to those events or educate them and make sure they have the proper information to do so? So that's where my expertise, I feel, comes in, because we did those events for 20 years. I was just talking to someone the other day, and as odd as it may seem, in a coaching call that we're part of, and I said, do you have a marketing bucket? And they're like, what's a marketing bucket, Corrina? I was like, you don't know what a marketing bucket is? And it sounds odd, but right? But what does your marketing bucket look like? Whether it be a physical bucket, whether it be a virtual bucket now on your phone, whether it be on your computer, what does that look like for you? What are the first go-tos that you have? So our referral partners and who we do business with absolutely has to be the first people that we educate, and we give a platform to make sure that they know also what to look for, so they're not spinning their wheels or wasting their time as well, right?
Well, I think that's really compelling what you're describing, because almost the entire careers of you and I, it's been lenders chasing agents. I think that right now, whether the agents like it or not, it reversed, because I can show you a home today, but if the lender can't provide funds and the people don't know what to expect, or either side is unreasonable, that transaction won't even start, let alone complete. So now it's a point where you loan officers, I think, are going to be the guardians. If you have the money and it's harder to get, the agent's going to have to wonder how their prospective buyers can complete a purchase. I think it's going to be a real shifting and flipping the tables on the situation.
Yeah. So can I do a little role play with you a little bit, Scott?
Please. I love that. I love that.
So you as an agent coming into my market, I'm going to talk to you and say, hey, Scott, would you like to know that I can share with you how to get your paycheck sooner? So
absolutely. Sure.
Eventually, that's what we're in it for, right? We're going to educate people, but we do want to get paid too. And Scott's going to tell me what? Sure, right?
Sure, of course.
How can I get my paycheck sooner, Corrina? And say, I'm going to save you, instead of going to 30 to 50 houses with your client, I'm going to save you that time. And I'm also going to help you guys get to the table sooner. And an agent's going to listen. And one of the things right now, one of the things I'm teaching is, why are we lowering the housing prices, right? If the loan officer isn't in front of you, educating you on creative financing, and I'm not talking about the loans, I'm talking about creative financing and how to get the seller, you, and the lender involved in a three-way transaction for seller credits, for buy downs, for lender credits. We don't collect any money up front for appraisals and credit reports. How to structure these deals. I want you, Scott, to bring me in when you have that client and help me help you in structuring that deal with you. I'm not going to step on your toes. I don't know how to write a contract. I don't want to write a contract, but financing wise. And I think that's where you're going, Scott, is we'll really become the experts again that we should be in helping you get that client and also go to less houses, right? Get them to the closing table sooner, but not have to go to 50 houses because of the fact you're listening to their needs. And if I'm helping you structure that financially, what they can do, they're not going to be as gun shy. Also, as well as buyer's remorse, if you heard it anywhere here first, it's going to be very serious in the next year if we don't talk to them and educate them properly on why they're doing this transaction. Rent's gone up 30 or 40%. So it should not be a matter of why should I buy? It should be a matter of how Scott and Corrina are going to help me structure this contract to fit my financial needs, right?
Well, you touch on a really good point, and one you may not have considered right away, is these transactions have to be not as coy, not as it's all about me and what I want. It has to be far more collaborative, where if you are collaborative, and that means that you should be more attractive, because a seller wants their house sold. The person that's going to play cute and not necessarily want to work together. The price is the least at this point because it's going to cost money, and the buyers were always prepared. But the sellers have to understand there's no more highest and best. There's no more over asking. There's no more, because there are many fewer buyers. So to me, if I was a listing agent, I am, and someone came to me and said, listen, I'm working with Corrina. This is a buyer's agent. I'm working with Corrina, and we really need to get on a conference call. And because your client may not have any shot as good as this opportunity, as collaborating to see what price is appropriate. And the seller has the ultimate say, but why not get someone that you can talk to and understand where the money's coming from? That's going to be big, and it is big right now.
Right. And I totally agree there, Scott. You made a really great point. I also feel like those calls and us being more, when we collaborate as far as structuring, and when I say bring me in, and that's what exactly I mean, is bring me into that conversation, because that conversation, the more loan officers have that with agents, is also going to stabilize the market and prices. Because if we're not steadily moving those prices down because we're not sure how to get that house off the market, and we bring that in with a three-way collaboration on where the money should really be spent to sell that house, what does that look like? Is it a 10 grand buy down? Is it a 10 grand incentive? Is it a 4 grand agent credit, a 5 grand lender credit? What does that look like that we can collaborate to get that house off the market sooner and not lower the prices? And that will also stabilize it. So there are a lot of loan officers who don't have or not going to have that conversation. Do you know how many loan officers I talk to weekly now who are afraid to have conversations with agents?
No, they can't. I think I love that we're going to come up with this phrase, collaborate to be attractive, because let's look at almost our entire careers. Sellers and listing agents had almost nothing to do with the bank. Just let's establish that. If you give me, it used to be some cockamamie pre-approval printed on some, nonsense letter off an email. So that's gone. But sellers were never going to bed comfortable. And I'll tell you how New York works. There's a contract, and then there's a period by which they get a mortgage contingency period where the deal's kind of up in the air, suspended, frozen, until we learn whether the buyer gets a loan. So your house is off the market and you have no way to know if they're getting a loan. But because it was relatively easy and the people were actually pre-qualified to a large extent, it worked. But now you're talking about many fewer buyers, much different underwriting. I heard that there's, you'll comment on this, far less liquidity, tighter standards. A seller is crazy, and a listing agent does not do their client a service by not having real communication with the bank.
Yes, absolutely. I promote talking to the listing agents all the time. And I also educate the buyer's agent on why it's okay and what information to share. One of the things I did this week alone is I've talked to listing agents and suggested a few things, like if the buyer's agent is willing, because they are getting skittish, right, Scott? They're getting a little nervous. Am I going to have my house off the market for 30 days and find out these people don't qualify? So is that loan officer on the other side willing to give up the credit score if the buyer allows? Is the loan officer willing to give up possibly the DU or LP approval to see that their DTI is not 69% or they're on the fence, without showing, too much personal information? What is the buyer willing? So if my buyer is in good standing, my buyer should not be afraid to present a package to the seller. We did not have to do that at a 2% interest rate. And I'll just bring how it's going to be more relevant is, in my personal opinion, we are creating more consumer debt right now in our market than what we ever have, with everything in prices going up, especially for the first-time home buyer, the senior community, different things on a little bit more fixed income and not preparation, that this is where the sellers and the buyer's agent and the lender do have to collaborate more. I could not agree with you more.
So, even taking one more step, actually, I'm learning on this call as I'm on the fly, like we're doing. Every state works within the law of agency. In New York, there's every law book is called McKinney's, and there's from bankruptcy, traffic, divorce. Well, there's agency A, and we're all representatives. We're all fiduciaries. So I think representation today, we're just throwing around the word collaboration, But representation today has to be no more hard-nosed, edgy, almost quasi-adversarial. It has to be, let's really work together. Let's settle this matter as if it's a law case. Let's get to the finish line. That was that old book, Getting to Yes. There can't be, sellers or listing agents hanging up on the phone and giving strict standards. There's so many fish in the barrel, 5 o'clock Friday or you're out. That's gone. We have to really try to, I'll say the word again, collaborate, but understand the bigger picture is to get deals done.
Right. And I couldn't agree more. There is being in a position to keep that package presentation going through the whole thing, the kill them with kindness, right? How do you kill them with kindness through the whole process and understand the bullet points that people want and those milestones that they need to know? Our average close time last year was 14 to 16 days. That's great. But still right now, the skittish time between someone closing and we have 30 days in a contract, 21 working business days to change someone's landscaping, maybe their school district, maybe the family generations living together. Maybe their banking, maybe their jobs, moving out of state. So you basically are on a level of high energy through the whole transaction, and your target dates are always your target dates. One of the things that came out in 2015 was TRID, was the CD versus the HUD.
Sure.
The closing disclosure was put out there so that way when we all got to a level of playing field, we sent out a closing disclosure and then we closed. Well, the market created this tolerance level for an early CD, right? But really the CFPB's interpretation was we want that to go out when everybody's clear to close so that everybody feels more comfortable and it makes it more ease, also the user friendly of the actual documentation. But we kind of worked in reverse because of the necessary information and steps that people need to have during the process to be comfortable that this process is moving forward. So
Good point.
even our documentation got moved up, right? So you're looking at basically 15 days, business days to do appraisal, title, to make sure they haven't had any other issues in their history in the past 7 or 10 years that may or may not. Another thing agents need to be educated on, there is so much information that's not on your credit report anymore, Scott. So there's bankruptcies, tax liens, judgments. These things could come up, could affect the process that a loan officer doing a regular pre-qual at the beginning, pulling credit, may not know. And it may not have mattered the past 5 years.
Well, one thing that's always stuck in my head is, sure, your car payment is on your credit report, but your cable isn't. Do you love sushi? Do you buy new clothes? Do your kids do 100 things? Are they skiing for the weekend? I mean, really, the credit report is maybe half of what you do, right? I mean, there's so much lifestyle. And I always wondered, I know people who are crazy with their lifestyle and country club even. So, I mean, that's completely ignored. That has to be looked at.
It's starting to be looked at. So they're coming out with the bank statements are going to be part of your trade line that's going to be embedded in the DU and LP now. So doing a little bit more research on that this week. What is that going to look like till that becomes more of an avenue that underwriters didn't care about that the past 10 years. Now they're going to start and see, are you truly overextended? And the loan officer has to get the bank statements up front. There could be something on there that's a reoccurring payment that's never on the credit report. And that may not have been as relevant the past few years as it's going to be too. So
Sure.
there's a lot of things that are going to come up differently. It may not change the landscape of what we do. It's just going to be more scrutinized because of the fact we do have more consumer debt. And it is debt to income heavy now on buying a house with a little bit higher interest rates.
Right. And there's I know a gentleman who's so involved with energy efficiency. If you buy a home over here that has, old windows and versus this condo that's built yesterday, you're talking about 500, 800 a month in home heating. The underwriter never knows how much you spend in energy costs, right? These are many, many hidden things that have to be addressed. I tell you what, I mean, I don't even know how that would happen, but it would have to be an education of banks. That's a big thing. And that has to be addressed.
Right. I agree. So if you look outside the US and some countries, your whole financial profile is part of why we're eligible to buy a house in the United States. In some other countries, people just never own homes, because part of it is your financial profile is all played a part of it. In here, not necessarily. So you might be onto something that is going to come into a little bit more into play here in the future. But primarily on debt to income for qualifying purposes, because of the fact that people will not be able to do the things they're doing, or they're going to be overextended. The immediate gratification that we have to look for now and how that consumer responds is the same thing as them ordering Amazon, Uber Eats, or DoorDash. They want the same experience with us, right, as the loan originators, because we give them the golden ticket to buy a house. That doesn't mean you can go out and buy a car, an RV, or a motorcycle, but it kind of does in their mind, because now you have the glory ticket, right?
Well, I mean, I'm so glad you said that, Corrina, because the reason why I made PlugIntro is that we all want more and better referral partners. And the two things we all have, you, me, and everyone who's in business, is you don't have enough people to speak to. That's why we're doing this on video and will be sent around the world. And you don't have enough value. So I was in Starbucks last week with a banker, and I said, you see that guy? I knew him. He's a surgeon. And he said, wow. I said, yeah, but he's getting a latte. So what good is he? We don't need a surgery right now. So a surgeon has no power and no way to help us in Starbucks. But when I said I need a painter, or I needed a dentist, or I needed, even a haircut, or what's a good pizza place, that's where the realtor can help you, because they're tied to the community. And that's really where all of us, I think there's a big need these days to offer a lot of benefit to the community other than your services.
Absolutely.
Another reason why I figured this out, and I realized we have to work together to gain attention and really earn attention, is in the field that trust is under attack. I'm glad you said Amazon and DoorDash and one other, Uber Eats. The fact is, if you look at the Super Bowl, they've spent $30 million to cut you out. They want millennials to get on their phone, press a button, and get a mortgage. And they can't do that now, but when there's AI, more so, it can happen to some extent. So I think it's, for us to maintain this lifestyle in the industry as we know it, we have to really, really, really connect meaningfully and offer a real benefit to our referral partners. And in your position as a loan officer, and usually that's been the lifeblood, is referrals from trusted sources, I believe that there's a chance where we all can create a forum in a community, call it a business exchange, and offer agents the chance to benefit and meet who they should know. And that's not social media where we pound our chest and talk about our awards. That's what I call local business media, where we are all already on these social media platforms. So why not get together and offer someone a digital position?
Absolutely. I mean, kind of go a little bit old school with it. Like Scott, like you said, like I say, marketing bucket, right? It could be virtual, it could be computer. But remember the old school checklist we give them of where they had to hook up their gas, their electric, their water, and all that? I mean, schools, community, development, even to where they can host event space for birthday parties, who's their local business partners. So that should be relevant in your mind. And I don't think anybody's had to do that for a very long time to help each other get business. Do you not agree?
Well, that's the professional has not been attractive. The professional has been, as we said, an order taker, and maybe even, how about this word, a flunky, where I'm on Zillow, I could buy anything. Now the loan programs are so easy. I got a 620, 10 banks want me. So you're my kind of unpaid servant. Take me here, take me there. I'll call 10 other people. That's what it was. And that's not how it should be. That these are trained professionals, both licensed lenders and agents. They also carry a huge amount of liability and duty. They pay they pay liability insurance and errors and omissions. We are not to be this kind of order take or someone who's just a cog in the machine. I've heard it said that lenders and realtors should be your lifetime resource.
Yeah, I think you're going with my slogan of the month is protect our profession, right? And where your passion meets your purpose as well.
I like that.
And if you are not doing those two things, and protecting our profession is, like you said, yes, and to some degree, you can click online, do an application, never talk to someone you're not sure. How many people really want to do that? So to protect our profession is doing what you said. It's promoting each other, giving each other a platform, also embedding yourself into the community and what services you have to offer that just aren't mortgages or real estate, right? How can you help them be involved? Tonight, I'm doing a school committee at the high school. What do I don't have a high school student, but I am going to have 6 interns within the high school, right? So what do we do and how do we teach? And part of those schools are now promoting Corrina, Carter, and CMS because we're using those to also facilitate new career ideas, new people coming into careers. So I think in that sense, protecting our profession is we are professionals. I agree. We are not order takers.
Right. And we've had this power now to reach anyone. I believe strongly in the power of loose connections. I met you through an organization, through a friend, Christine. We share, and it's you've heard the phrase. It's such a small world. It's such a small world. I was out to dinner, didn't even want to go last week, and I met someone I knew her dad. Who would have known that that could possibly happen? So if you have the ability now to reach people, and I say the word indelibly, this video is lasting forever. So you might meet on the street, that's happenstance, but if this you don't meet. So if you can meet and provide value indelibly and give enough without keeping score, throw those seeds over your shoulder like Johnny Appleseed. If we're platinum steak dinner, you might expect a return where there's some form of reciprocation or referrals. But if you're giving them a place where, such as a digital position where they could gain exposure with you, that's powerful. Yeah. We cannot be the one-trick pony anymore. When I ask these lenders, what do you provide? Keyword provide, like you provide for your kids. They say good services. You have to give good service. Are you going to give bad service? So what do you give them? And the fact is that there's been too long of a one-way street where realtors give business and don't expect something back. So I think lenders should do something to distinguish themselves and give an agent a position within. Think about it. Agents might be in the business community, but no one connects them with the business community. So why not do that?
Mm-hmm. I agree 100%. I agree. And I believe that's all in part of us protecting our profession is to understand that we are professionals and our job is to educate the community and bring the community in, and then the community will help you promote as well too. So what can you do? But not a lot of people want to work that hard either, Scott. So
that's good. That's good.
Yep. So we'll be the ones that'll be standing, educating people until this video lasts for the next 10 years, 20 years, or what, when we're looking back at it, right?
And Corrina, this education is not going to be easy because there's always the we've done it this way thing, number one. Number two, sellers are intoxicated by 2021 values. And you mentioned buy downs and credits towards closing costs. Someone's going to say, I didn't do that. No one gave me a dime when I bought my house. I mean, I want this money because Sam down the street, he's got his house stinks next to mine, and I want what he got. And we're talking about it at the coffee place. So education is going to be a tsunami of us giving this effort to people who want to see the light. And if they don't, they're just going to get negatively impacted.
I agree. I think your paycheck will soon reveal how much you are educated or who's educating you, right? So in that, it's a collaborative effort. And if, like you said, this whole call is the collaborative effort is not there, then you're going to always be searching for the next thing of how to market and what that looks like. When you really have it within your community already, it's just a matter of who are you going to find that you really connect with, that you enjoy working with, who's going to give you that education and reciprocation that you deserve.
Right. But you said, who are you going to find? And you're one person. I know you sleep every day. There's no hiding the fact. So you can't do it alone. At this point, we have this digital exposure. If we continue to, as they say, pay it forward and benefit others and actually earn their attention because you have something compelling to offer, then you can deputize your market to work with the people who really, really want to stand out and serve others. And I'm happy we're at that point. Because before you could throw up your sign on a bus bench or a shopping cart or any kind of ad anywhere, and they want a house. Look what Zillow did. No one wanted the realtor; they wanted a house, so they click on some realtor's face.
Yes, definitely. So it's part of that immediate gratification, right? So we have to catch them. And that is, like you said, it's going to be a huge education circle of revitalizing our communities, agent communities, loan officer communities, and what that looks like. I collaborate because I've also been a coach, teacher, and trainer on my second company. I collaborate with other originators in my area for the past 15 years. So I'm one to not shy away and step into another mortgage office and say, how can I help you guys? So we're going to reciprocate. But a lot of people are afraid to do that. And I'm not afraid to do that because I want everybody to win. But at the same time, the only way we can do that is if we're working together.
Right. As Zig Ziglar said, you gain as much as you give. And I think now that it speaks to your issue of the scarcity versus abundance. The people trying to hold it all in cannot. If you're going to be, I'm not saying you're not an advocate. Of course, you're an advocate. That's your role, your obligation, your duty. However, the best solution is not necessarily opposition. It's really, really trying to have this as an effort. I think that there's the true art of this next phase is going to be those professionals who are willing to be a bit vulnerable, because you have to ask to collaborate. Think about it. I can't just say we're collaborating. I have to invite you to share with me this approach. And then the good things can happen. But if someone wants to fold their arms and not call you back, there's no collaboration. You have to really be vulnerable and brave to invite that type of that type of operation.
Yeah, and I think you take it a step further there as far as the vulnerability. This year, more than ever, I've told my personal story, my personal journey, so people know who they're doing business with, right? I don't believe my life is a storybook Facebook land, right? I believe we all have our journeys and what it looks like, and how can we help each other? So being vulnerable in that part of the collaboration and sharing, alone with being yourself and and being authentic in the way you approach people so they want to do business with you. And I feel like I do that in a positive way, so I don't create the scarcity mindset when I'm dealing with other individuals in the mortgage industry. But only they could tell you that, Scott. But I feel like I do a good job of that. And my team, I feel like that's part of my job, to come in every day and create that culture for them too, to where they don't feel like it's a scarcity mindset within the company of the sky is falling because of where we are with interest rates or business has changed, because there's always a way to turn things different. It's just your approach and how you're going to do it.
Right. And that's far more inviting. People want to deal with people, and people don't want to be deceived. So could be some slick, glossy Madison Avenue, attempt to advertise or portray you. But some of the people I'm mentioning, you and I both know, who are saying, look, I'm far from perfect. And guess what? You are too. So let's understand it. And, your friends don't need excuses, and your enemies won't believe them.
Yes,
so
absolutely. You're 100% right there. So I lead every conversation with, I'm never perfect and not always right. Right.
Sure. But you can deliver the goods. So the fact is, if your need for home loan financing is there, I know you can do the job. So it's a matter of just really, being able to, there's got to be this transparency. And of course, there's financial transparency, the Dodd-Frank and the HUDs and the CD and that. There's no more hidden ball trick. There's no more. I think things have, and I think it can work. There will be reduction in prices because the people that could afford, based on a certain amount of income, they could afford $650 last year. Now they're going to afford maybe $500. But that means that they're going to get, selection. Some of the lower price homes are going to be more attractive. So maybe the little guy wins for once.
Absolutely. And then also working with someone a little bit longer than 2 days or 14 days. They may be in your book of business for before they buy. They may be there 3 months to a year now versus just 2 weeks.
And that's why you have to be really, really known, earn that attention. One thing I've really worked on because of my raising my daughters is I am well known with the moms at school, and the moms are the mafia. They run everything. They know, the dads don't know about the cable bill and what you got to stay on the good side for sure. You got to be really polite and say please and thank you. So every professional will be well served of knowing the people, boots on the ground in the community, buying their dinner and sticking around, raising kids in that area. They make the choices.
Yes, I agree 100%. Now, I don't know about the mom's mafia, but I know some PTAs are run pretty close.
Sure. But either way, I made one remark once to someone I didn't know. I had to go to the PTA president. Said, "Listen, I didn't mean how she took it." She goes, "I'll talk on you. Go to bat for me." But Corrina, thank you so much. I'm so happy we got this chance. I'd love realtors in your area and others to know more about you. And I'm happy to connect meaningfully like we have. What's the best way to get in touch with you?
So you can reach me at CorrinaCarter.com or CMSMortgage.com, and any one of our hometown experts will be glad to help you. And we preach and teach education weekly. I even do a coaching call for my team every Thursday at 11:05 for 30 minutes. Not a sales meeting, Scott, just a coaching call, and talk about how we're going to educate people this week, because that is important that it starts from the top down, because if I'm not first in and last out, neither are they going to be, right?